Hello traders, let's look at the chart again. We want to analyze the chart in a fractal trading. There are 5 most important things in fractal trading. The first one is that you must determine the beginning of the trend. As you can see here in this chart, the market is going down and this part goes up again and then goes down again, and now it's started going up. So you look at the chart in a kind of a river. The river flows, ebbs and flows, okay? So from here, let me change the color. From this part up to that part is an uptrend. Again, from this area to that area down here is downtrend. Now it started again going up. So you must know the flow of the chart. The water flows in different directions. The river, if you know which direction the river flows, even if sometimes the river goes backward or sideways, you know the general direction. Even if you enter the market in a wrong position, if your entry is in the direction of the main direction of the chart, yeah, your trade's gonna go in a drawdown, but at the end you're gonna hit the target. So you must know this general direction. That's the first thing. The second thing is that you determine the beginning of the current trend. So I normally mark it with this red vertical line. So that's where the previous trend began and it ended here. From this area, the second red line, the trend started to go up. So my view is that this downtrend has ended at this down here, and from now on the market's going up. So you must know this, the beginning of the trend and the end of the trend, and the beginning of the current trend. These two things are more important than anything else. Now, the second thing that you must know are the highs and lows. So you must know where the highs are, where the lows are. And some of you might think, it's pretty obvious. But when you have a real account and you look at the live chart, it's very hard to determine if the price goes up a little bit. Is it a high? Is it going to go higher? So you must know the highs and lows. So you have to go back to the chart like a back of 50 days, and you determine highs and lows, highs and lows, highs and lows. Okay, these are your eyes get used to seeing the market in a kind of a highs and lows way. So as you can see, there's a high here. Market comes down, goes up, down, again goes up. You see, it kind of stuck here, fluctuates, and then finally it starts to go up again. See, these highs and lows at the beginning of the previous trend are pretty big. See this, from this high to this low, but when at the end of the trend the highs and lows get smaller and smaller. So when this happens, you know that the market's kind of in a sideways market. You must know the distances between these highs and lows. You see this gap here, you must know this gap. When these gaps happen, the market normally tries to go back to these areas. We have another gap here between this low and the next high. This gap here and the previous gap, market should fill it up. So you can continue these lines and this line. So the market will come to this area first. Maybe it goes up, comes down, and then they're gonna go up to this area again. If you know these small things, you know which direction this river, the price river, will flow. So you can determine you're gonna enter as a sell or a buy. So from now on, look at the market in highs and lows. If you don't know how, just grab a pen or something like I have and then start to draw these lines. See how much the market moves up in a high, how much moves down in a low, so you can determine the ratio between highs and lows. So now, when your eyes are used to these things, I normally connect them for the the next stage, which is the trend line. The third important thing is the trend lines. So I connect them like that, and I keep these highs and lows like this. So you connect them, and then you see how the price is flowing and how much are these highs and lows. And this is the last high, and the price is going down. So the third important thing is the trend lines. I normally draw a trend line with the black color. So from the highest high to the next high, you connect it and you continue it. You see, I connected this high to this high. That's it. The rest are the next line. So the next one, I do it again the same. From the next high, which is the last high on the previous trend line, I connect it to the next high, which is here, roughly in this area. So I continue that. Sorry, this. Let me draw it again. Like that. As you can see, the price at this area broke this fan line. We call it a fan line. It's like a fan, you know, it opens up, the Japanese fans. It broke, went up, came back, touched the trend line, and it couldn't get back to that trend line again. When this happens and the price is between these two trend lines, you know that generally it's not gonna go and break this line again. So you're gonna continue to reach the next trend line, which is the main line here. If you know that the price is moving forward. Is it gonna slow? It's like a bicycle, it's like a motorcycle, it's like a car. When you want to turn around, make a U-turn, you slow down and then make a U-turn, right? The same thing happens with the price. It goes very fast when it goes in the direction, when it goes in the trend, and when it's gonna slow down, it's little by little, highs and lows get closer to each other, they get smaller, and then finally it touches the trend line here, breaks it up, comes back down, and then the new trend starts. So you must know these things. Now, the fourth thing, important thing is support and resistance line. If you've determined these highs and lows, you can easily draw some trend lines and some resistance lines from these highs and lows. So you can see there's one line here, this low, another high here, this low here, another high here, and the price is still stuck between these. Another low here. If you have determined and you've actually connected these highs and lows, drawing a support and resistance line is very easy. Now, I normally do this with this purple line. So I start drawing trend lines, support and resistance line like this. High, low, another high, this low, this high here, which the price already reached this area, one low here. As you can see, this low is this support line is very strong. Market couldn't break it. Even if one time that it broke, it just went back and started the new trend. So these are the highs and lows that we need at this time frame, which is 1 hour time frame. This is our higher time frame. I normally start at 1 hour. And if you watch my previous videos, I normally go to 10 to 20 times lower than this. So if this is 1 hour 60 minutes, I normally go to the 5-minute chart to find that entry point, which is 12 times lower than the 1 hour. If you trend in like a 4-hour chart, you have to go to 15-minute chart time frame. If you trend in a 15-minute time frame, probably 1 minute or 2-minute time frame is best for you. Now, the price broke this line, came back to this area, and then it started to move up. Now, you have to determine the gaps. The gaps are important, but if you don't have these highs and lows, you cannot tell. As you can see, from this low to this high, the price hasn't reached this area yet. There is a gap here. The next one as well, from this low here to the next high, there is a gap. When these gaps happen, you know that in the future the price gonna go back and test these gaps. These are empty areas. The market, just like universe, the market doesn't like empty areas. This vacant area, the market's gonna go back to this area. Yeah, it's gonna ebbs and flow. Maybe this took like what, maybe 5, 6, 7 days, but still market came back to this area. And there's another higher area here that is a gap. You can be sure that the market's gonna go back up and test this area. Maybe touches it at the bottom, maybe goes in between, maybe goes to the high. Doesn't matter. The price gonna reach this area. Now, this is our higher time frame. I normally don't look at the candlestick patterns and the single candles because I want to see the market as a river and where it flows. I want to see the general direction. The most important thing for me is highs and lows. That's it. If I can determine where the highs and lows are, I can draw trend lines, I can draw support and resistance line, and I can see these gaps. Where the trend breaks the trend line, it's my perfect area to go to the lower time frame and find a very good entry point. So this line here, the red line, as you can see, it goes down here. From down here, the new trend starts. So that's the lowest low, and the next low, I start to draw some trend line. Let me zoom in. You can see now. You can turn it into candlestick chart, doesn't matter. So from this low to the next low, oh sorry, this color is not right. I normally draw the trend lines with the black color. So I start drawing this line. You see the next high, the next low is, touch this trend line. The next one is here. This is a fan line. You can draw this fan line. The price broke this, touched the previous line, and then came back up, and then went to this gap area. Now the market's going down, but the general direction of the new trend is upward. So from this time, we're gonna go to the lower time frame. What are we gonna do in the lower time frame? Because the market's going down, but the actual direction of the trend is up, we are trying to buy the market. We're gonna have a buy position. For a buy position, there's a very famous quote in the market: buy the lows and sell the highs. So because the trend is upward, we're gonna buy. For a buy, we need a low. We need to enter at the low of the market so we can have that movement upward in our direction, so we can take some profits. The market's kinda stopped here because of this support line here. It broke it, came back down. The fifth important thing is breaking the line and pullbacks. The price with this big candle, you see this big candle here, the green one, with one candle, price broke through the trend line and this support line, which was a resistance. Now it's a support line. Went up, now it's gonna come back down, take some breath, and then it's gonna move back up again. That's what I think. That's the general idea of me going down to the lower time frame. So at this area here, I'm gonna look for a low in the market in the lower time frame to enter a buy position. Now let's go to the lower. My lower time frame is 5. You can look at the 30-minute time frame. Let me turn this to bar chart again, which is a more detailed view of the 1 hour chart. You can look at the 15-minute. Now you can see the general view of the new current trend. But my time frame, the trading time frame is 5 minutes. So now again, we do the same. This is a fractal trading. Whatever we did in the higher time frame, we do the same exact thing in the lower time frame. Now, what I mean by that, this is another trend downward. This is one more trend upward, and it's still going on. The same thing we're gonna do. We're gonna connect some highs and lows. First thing, determine the beginning of the trend, which is down here. Second thing, connect the highs and lows. So this is the low of the market, high, next low. So all these highs and lows, I take it as one. This is the low, okay? But market's fluctuating in this area, kind of a triangle. And then suddenly with these 5-6 candles, it just jumps up, comes back down. Again, it's stuck here. The price cannot break through the previous high. It comes back down. When it comes back down, it's just like a runner. Goes back and gathers some force like a spring, and it's gonna jump back up. In this area, we have a gap. Remember our gaps? Between this high up to the previous, up to the next high, we have a gap. See the market break through all this area. Let me bring a pen. From this area here, market with one sharp move broke through all this area and then came back down. It should come back down to test this area again. Okay, it's a gap. Yes, the trend is upward, but the gap is at the lower side. So the market went up and then came back and touched this area. You see, this is how you know that the market's gonna fill up this gap or touch at least this gap, which it did. And because it's touched, it can fluctuate in this area, but finally it's gonna go up. Let's see what happens. So at this area, the third thing is drawing the trend lines. I connect these lows, and as you can see, market is down here. So I can't draw any other line. That's the only thing I can draw. So from at this area, I'm waiting for a move. So you can draw some lines like a support and resistance line again. We have one here, we have one up there, and another one at the top of the market. Market is stuck in this area. You can use your system, your strategy, your indicators to find a very good entry point at this area. I normally, because you see, let me draw some beautiful lines here. You see this trend line from the previous time frame. The market broke through and came back. This is the fifth important thing that you must remember. Any kind of a pullback, you wait for the pullback. The market breaks through a line, a support and resistance line or a trend line. When it comes down and pulls back to that line again, that's a very good entry point. This area is the best entry point, and at least market's gonna go up to touch the top of the market. It's gonna take, I don't know, the whole day, maybe tomorrow even, because this was the 1 hour time frame and this is a 5-minute time frame. But I'm sure today something's gonna happen here. But you must remember that you have to analyze the market in both directions, one up and one down. What if the market didn't go as you planned? What if it didn't go based on your analysis? You must have a strategy. This is where the stop losses and all those money management comes in. This line here is probably where your stop loss should be. The previous support and resistance line. The previous area of the support is your stop loss. So if the market goes up, good. If it breaks and goes down, you don't want it to go lower than this. You must have your stop loss somewhere around this area. This is the bottom of this gap here. So remember that. Always analyze the chart in both directions when you want to enter the market. In this way, you don't lose your capital. Alright, I don't want to enter here because this account I don't have any money in this account. But I will keep this analysis as it is to see what happens during the day. This blue line here, I put it as the opening of the London market, and the next green line is New York market. So let's see what happens today. if our analysis is right or wrong. I hope you enjoyed this analysis. Remember, multi-time frame trading, you have a higher time frame and then you have a lower time frame. You must analyze both time frames to find the best entry point. Please subscribe to my channel if you enjoyed this. If you like more videos, please leave a comment so I know what you want to, and I hope you enjoyed it. Have a good time.